All right. Good morning, everybody. Just testing out the audio real quick. Looks like we're good to go. Okay. So good morning to everyone. Happy Monday and welcome to another Engineering the Markets. My name is Jared and it is March 21st, 2022. Hope you had a great weekend. Hopefully you've had some time to review some of the price activity from last week. Start to think about the next week of trade as we are moving away from the majority of our first earnings season. We have a couple of, I would say, heavier hitters this week, but they're not necessarily big market movers reporting this week. Stocks like Nike, and we have companies like Pinduoduo reporting this morning. But the classic discussion from last week and some of the shift that's occurred is some of the price activity that occurred on the past 3 days of the S&Ps. We saw a big resurgence of bullish momentum in the market, and more specifically, the type of price activity day after day, the sort of continuation play, similar upside ranges, and also opening lower and seeing continuation, basically the bull stepping in and proving it for 3 sessions in a row. A lot of market participants might have been somewhat surprised by this price activity, along with us trying to explain maybe some of the rationale as to why this happened. So without further ado, let's start off like we do every week and look at the SPX expected move for the week, also in context with last week because it was a breach. Now, last week, if you recall, we were looking at about 144 point expected move. This was very similar to the week prior, and on the week prior, we had a downside breach, a very mild sort of look below, and then a return back into the expected move range to finish out the rest of the week. So the trade overall was pretty standard. It stayed within its standard deviation bounds, and we didn't really have a lot of expansive price action. The week that we just came from, we obviously had some catalyst event in regards to Federal Chair Jerome Powell, the press conference that occurred after the FOMC minutes on Wednesday, and then that market reaction to this event amidst what we already know to be part of the market, which is some of the uncertainty and growing concern with Russia-Ukraine, along with the geopolitical and financial impacts to companies that are starting to leave Russia. They're not necessarily poised to do business with certain Russia exports, and how this can affect other countries who also rely on certain key commodities coming from these countries. But amidst all of that, price action is what we trade. And as the market started to get more bullish after Wednesday's session, we saw 2 continual days of upside leading into Friday, which, if you recall, was a triple witching event for the market. Now, this is a very normal activity, occurs 4 times every year, but it is a very monumentous triple witching because of the notional value that was settled. This is reported to be the largest single day rollover event for the market ever. It's the largest notional value of option, index, and ETF derivative products that were either expired, exercised, rolled, assigned, whatever took place on that Friday. So the market overall throughout the week continued its upside breach, and more importantly, the size of this breach is what I want to allude to. We saw things like volatility come off throughout the remainder of last week's session. More specifically, both the volatility products, volatility futures, seeing very steep downside activity, coming into a structure of what we like to refer to as contango, which is where the short dated or the front month contracts are priced lower relative to back month. This very normal term structure for volatility. And while it still remains a mild contango, one could even argue that this is fairly flat overall. It is a more positive sign for bullish behavior moving forward. You can also look at things like the VIX, which also very clearly lost that more important 30 print and saw continuous downside behavior for the remainder of the week, as some of this volatility was coming off from bullish activity, and some of it was coming off from the actual triple witching on Friday. Friday tends to be sort of a lower or reduction in volatility type day, but on a triple witching event, volatility especially is sensitive to downside. So all in all, the S&Ps continued to make its upside breach, and we saw an expansion of about 181% more than what the market priced. Now, going into this week, we are looking at a smaller expected move. It's a full week session, so there's nothing really disadvantageous with the number of calendar days we are trading. But due to the size of the volatility contraction, we are looking at a volatility contraction inside of the weekly implied volatility for the SPX. Now, this is usually kind of an odd event because normally if the market gets expected move wrong, and last week they certainly did get it wrong, you would often see the expected move expand. However, this is an upside breach, which naturally tends to have more of a bearish lean to volatility. The type of volatility we've been seeing has been mostly on the put side of the market, as we've been in a correction for a couple of months. And a lot of what did expire on Friday was more or less the put side of the market. A lot of people either exercising their puts, taking profit from larger hedges or downside plays that started at the beginning of the year, along with just people who are playing the shorter term downside and downtrend in the market. All these participants forced to cover, and of course, with their puts expiring on that series, looking to roll those profits into the next quarterly series. So for the week, we're going to look at this expected move as just a guide. One thing I like to do whenever I see a breach of expected move is I just like to anticipate the idea of more breaches in the future. This is true relative to the small breach we got 2 weeks prior, but I think more importantly from last week, there was a bit of more anomalous activity with regards to triple witching. So we do have a smaller expected move. That small range relative to some of the volatile trade we've been seeing gives us an idea that we may see another breach to come. And what that means is if you're selling short month or short dated premium, you might want to consider some ways to protect against these breaches. Usually the easiest way is to consider capping off your risk. If you're doing something that sort of has unlimited risk on expansion of range, you might want to be careful with those strategies moving forward. But you also want to continue to take advantage of volatility coming off. If you were selling puts last couple of weeks, that obviously ended up quite profitable, as both the market was able to short-term bottom and these puts carry a lot of inherent volatility baked in. You're essentially selling some of these hedges, and as the market covers those hedges, volatility drops off. There is a bit of a bullish lean, and your puts tend to expire either worthless or you're able to buy them back quite profitably on the session. So all in all, good strategy from last week. Lots of vertical put premium selling. A lot of that was advertised by some of the strategies of our in-house option expert, Artie. And as we move into this week, we are looking at that smaller expected move, top side 45.70, If you look at sort of where that lines up, it's roughly in line with our next major resistance levels in the market, which coincide with this double top and the gap structure that we've seen prior. Downside 43.57. And that would, of course, bring us back into essentially testing some of this expansion that we saw last week. So from a technical sense, if we did see ourselves back testing this area, it would be quite a healthy move as the market got a bit ahead of itself on the breakout. So as we look at the S&Ps, the picture doesn't really change, but the context and some of the volume signatures might be of concern. For one, first and foremost, we did get out of our retracement. So as we look at our secondary and once again our primary retracement lines, just marking these swing highs and marking the absolute high, we were able to get out of both of these areas in one fell swoop. This is usually indicative of a pretty large market sentiment change, at least in the short term. As we start to add things like moving averages, we can see that the market was able to not only break through the 20. This was an area of concern for previous rejections. This is where the market tended to sell from. And even if we did get breaches above the 50 period and failures to expand were of continual concern in the larger downtrend. All of these were, in the short term, negated. You can also see that we had a one-day breach of the 50. Now, all in all, these moving averages are lagging overall. They do still have a posture of down sloping. And what we're going to be looking at is the volume reading from last week, which was quite bullish, but overall might also be a bit extended. Usually when you see this type of behavior, the first thing you can start to predict is a pullback. And what this will look like is dependent on the type of bullish conviction that the market continues to provide for additional setups moving forward. For one, if our pullback is mild, we'll be looking at something like measuring the size of the retracement itself. Something as simple as a 38.2 retracement, if we were to top out this session, would bring us back to about 433 in the S&Ps. Now that might look like a lot of price movement to the downside, but that certainly is something we've seen on an intraday session. So one day of pullback, regardless of how that is structured overall, might be quite healthy to sort of reset the bullish momentum and to provide what I would consider conservative bulls an opportunity to consider a bull flag, essentially getting into a pullback buy as opposed to buying into this accelerated bullish momentum. Additionally, this setup is coming into the 200 period moving average on the daily. Very strong moving average in most cases. So a pullback buy has the secondary challenge of holding one of these retracement lines. Ideally, it's going to be the primary. That way, the market is essentially stating to us that we have expanded out of a downtrend. We have back tested this downtrend resistance and has confirmed it as support. And then a new fresh high, ideally through the 200, would bring us into a posture of maybe considering much larger weekly trend changes moving forward. This, of course, is with the larger context of our weekly engulfing and the strength of last week's move overall, basically cutting through 2 weeks of downside pressure. Or anyone who is short the S&Ps over the past 2 weeks is now either out of the market or underwater in their short position. So strong recovery overall. And what this looks like for other stocks, we'll certainly talk about the NASDAQ in a similar context, breaking through retracements, getting to weekly high resistance, sort of swing high resistance near the close. And this is kind of an interesting move into the end of the Friday session because the NASDAQ was a weaker overall portion of the market. But on that last 5 or so minutes, we actually saw an upthrust into the weekly swing highs. Market was able to breach it slightly, and we are opening approximately at that weekly resistance. So we'll kind of see what the bull versus the bear setup looks like, as we're not quite out of the woods on the NASDAQ, but on Friday's session, there was essentially no hourly pullback. The market continued to advance for the entirety of the intraday session. And that led to that final test of weekly highs. So one thing I wanted to point out, and it's an observation of what the market provided last week, was overall the NASDAQ especially, and a lot of, I would say, growth related stocks, anything that has been in clear daily and weekly and even monthly downtrends in some cases. A lot of these stocks all have essentially the same type of setup forming at the bottom of their ranges. This setup has a name. It's a classic reversal style pattern, and all it needs now is that final confirmation. The pattern is established, and we're just looking to see what the next phase looks like. So this pattern is known as three white soldiers. Now, the reason I bring this up, and we'll look at a couple of examples, is it is the type of reversal that requires multiple days to establish. For one, if we're looking at daily candles, you definitely need at least three. That allows you to establish the full three white soldier structure. More importantly, though, is how these candles formed and the context related to the type of expansion we saw. So, for example, let's get a stock like PayPal. These are stocks that have been in very strong downtrends. They're obviously testing moving average that have provided resistance in the past. And even during periods of relative strength, usually they will form trading ranges as opposed to simply going straight up. Now, in context of a chart like PayPal, what's important about this particular structure is the type of intraday setup we're seeing day in and day out. The market has a strong prior session, pretty much a straight up day, and overall the daily candle looks like a strong advancing candle. The next session, we have a slight gap down open. Essentially, we're not opening higher, so the momentum is not exhausting itself by gapping up and forcing bulls to buy even higher. The market actually pulls back into the prior day's session. But on that particular day, the market continues to advance. We close once again with strength, and we expand our previous session highs even further. And then, of course, finally on Friday's session, same pattern. Gap down below previous day close, since we are closing at the highs, and the bulls are able to carry this price momentum all the way to high of day and close near those relative high of days. Now, of course, as this forms, you can look at stocks like Square and PayPal, or Block, as most of us like to constantly correct. You can look at Meta. You can look at stocks like Amazon. Very strong expansion candles, very clear sort of retracement breakouts, lots of follow through here. They all look very similar, however. The market actually does a small gap down open each and every intraday session, and then the bulls take advantage of the day for the entire day. It's a strong uptrend. And in the intraday session, this is something we noticed last week, but it became hard to believe in. Especially as an intraday trader, you're basically looking back and saying, well, this market already advanced for 2 days. The market typically doesn't do that. So I'm going to look short. I'm going to try and fade this rally. And as you've seen over the past couple of sessions, this is the wrong strategy to be employing, simply because when forming a three white soldier, there really is no short. There's very mild scalps at best. There's possible trading ranges in the intraday, but the market is moving up. and especially into the close. This is very important for us as intraday traders. On trend days, trend days have essentially two characteristics into the afternoon session. They can either fade back to the VWAP or value zone area, whatever that looks like on the chart, or they can continue to expand. And this is very dangerous for someone holding a midday short and continuing to add into that upside pressure. As an intraday trader, you only have so many hours in the day for that thesis to be right. And on days like last week, this is where you can get into a lot of trouble. You continue to hold those positions close to the intraday close. So this is happening in a lot of stocks. The reason I want to be a little bit cautious is when you see it across the market, and when we talk about the idea of the triple witching, closing out of a lot of short positions, puts more specifically from last week, this added fuel is what carried a lot of stocks to their relative targets. I'm just kind of bringing up stocks that we all know and love because they all look the same. They all had strong advancements over the past week. The market went bullish for a couple of days. Some of them have broken out. Some of them look stronger than others. They've gotten over different moving averages. They've maybe cleared weekly highs. The volume has been advancing. This is another key thing to kind of pay attention to. Some stocks had what I would consider some sort of exhaustion volume on Friday. That last hurrah before consolidation or pullback begins. That's not to say that these stocks are done moving up, but what the next phase of the market may look like is a lot of consolidation, a lot of relative underperformance, and just a lack of momentum over the next day or two as these moves settle out and as new participants reestablish either a long or short bias in the market. So keep this in mind. It's a great move, but as a bull, you want to be looking at your risk to reward in some of these positions because some of them are not quite as convincing as others. I bring up something like a Palantir, very beaten down overall stock position, very strong weekly engulfing structure. Obviously, looking at the relative lows and highs, being positioned near these bottoms allows you room to gain some profitability based on your risk. But as we've seen, sometimes these have deeper than average pullbacks. Sometimes these ranges fail and they actually back test their range lows. So it may be worthwhile to keep these on watch and not necessarily enter in on continued bullish momentum. Because what's going to potentially happen is we're going to run out of that momentum on something like the daily time frame. Something that would simply occur here is before consolidation, something like the RSI can start to top out. We can look at higher than average readings in something like MACD. And we can just have some of these oscillating indicators run through their momentum and fail as we get to key resistance, because a lot of the market is still testing upper supply. They're trying to change trends. And these trend changes both take time, but they also require pullbacks, or in this case, consolidation phases. So all in all, market was in a position of relative weakness across the board. There's a lot of stocks under 200-day moving averages. A lot of them were continuing on downtrends, and the market got a nice upthrust at the same time. It wasn't just one sector or one area of the market. The entire market got the relief. This is very indicative of a weak market seeing a correlated bounce at the same time, because a lot of this downside exposure occurs in different stocks, in the S&P, in volatility products. It's all correlated at the end of the day. And when something changes, they all tend to see the same relief patterns and structure albeit some are weaker and some are stronger than others. So as we move into this week, pay attention to what was already strong. Looking at something like healthcare, we talked about this a bit last week. The idea that the entire economy of the US might be entering into late stages of its business cycle. If that's true, we're seeing things like outperformance in utilities. We're seeing things like, amidst a correction, the utility ETF making new all-time highs. We're seeing energy prices soar. Crude, especially on the morning session, opening up quite strong, bouncing off of a breakout area and seeing a couple days of continuation. So the energy sector is still technically in play, and we just have days of downside and upside, lots of volatility in between. But as we move into a late business cycle, potentially, and we'll look at sector performance during these cycles this week as we talk about the yield curve inversion that may be about to occur, healthcare becomes a main focus. Usually this is quote unquote defensive, but it's also one of the last sectors to perform as the market enters into quote unquote more recessionary style economies. And when I say market, I mean the actual economy. The actual stock market tends to still be in some sort of corrective phase. So as a bull, we want to appreciate the correction that just occurred. A lot of things had corrected, obviously 20% or more in the NASDAQ. A lot of stocks have been down 50% plus from their all-time highs. A relief rally occurring across the board is of course going to provide short-term strength. It's going to get us out of that correction area of the market. What I want to caution is the idea that we're going to go straight to all-time highs from here. This market is likely going to have some back and forth play for a long time. We're going to see a lot of indecision at key levels in the market. We're going to test, retest, back test, up and down, sideways, kind of test this market. And during this corrective phase, which we're still technically in, a new uptrend can form, but that can lead to a secondary downtrend shifted over in the chart. This is the idea of what's called cycle analysis, where you tend to have cyclical patterns, fractal style moves, basically repeating structures. And this is indicative of the main trend, which in this case, we're concerned, at least in the short term, whether the market is purely going to enter into a brand new uptrend, which in this case, leading us to all-time highs, or are we simply seeing a weekly back test? A monthly lower high, for example, would be a great way to spot the type of potential setup that we're about to see. Market was able to pull back to the 20. Market can bounce here. A monthly lower high has plenty of room to form. It could form anywhere in the 475s if needed. But moving forward, if we see that weakness return, if we see another daily, weekly downtrend structure itself, we want to understand the potential of that setup. We obviously want to trade it into those areas of resistance first, using the right risk management with daily and consolidative pullbacks. And then from there, moving into a secondary possible downtrend or a possible breakdown. In this case, it would look like a monthly lower high and a breach of our monthly low. So obviously moving forward, these levels are very important. These relative lows, these breakout areas of the market, current resistance points on higher time frames. These are all things that we could start to evaluate because we haven't really been in this posture in quite a while. Market was in an uptrend. Very easy to identify uptrend, very clear areas to go long, clear areas to consider weakness, distribution, and break of trend into our first correction. We might be out of this correction for now, but what we're looking at is what the next phase of the market can bring. And this can easily be something to consider long for a period of time, some range trading moving forward. then the eventual potential shift back into a period of weakness as we look at other pressures in the economy. So we'll talk about some of that this week. We'll look at the yield curve. We'll talk about some of the upcoming Fed basis point projections using a product inside of Thinkorswim. And then we'll just kind of cover some other historical data about the type of price action we've seen recently and historically what that brings for the rest of the year. So with all that said, my name is Jared. This is Engineering the Market. Stay tuned this week. We should have a lot to cover. And as always, trade safe and stay tuned for pre-market prep.
All right. Good morning, everyone. Welcome to Pre-Market Prep. I hope everyone's having an amazing morning. Hope you guys had an incredible and amazing weekend. Good morning, Norm. How are you today?
Hey, good morning, brother. I'm doing well, thank you. I'm
Good,
doing
good.
well.
Glad to hear that.
He's got a picture of me up. I've got home from essentially being away for the better part of 2 weeks and have some camera issues and working on my computer. So I'll be back in a couple of days.
Absolutely. We got a very nice picture of you up there, which is one of my favorites for sure. I have a few, but this is definitely one of my favorites. And trust me, if I put the picture to fit completely, that is not a plate of vegetable he has there, if you guys know that for sure. Guys, good morning. Hit that thumbs up over on YouTube for Jared. We appreciate him coming on every morning and giving us that overlook and breakdown on a couple of stocks like PayPal. He broke down this morning as well. So thank you for that, Jared. Guys, let's get to it. Our gappers list this morning looking pretty nice on both sides. We got a couple of names here that we've been looking at for the last couple of weeks, right? Same story continues to drive these up or down, like Indo, HUSA, some of these oil companies. Oxy has been great a couple of times here. So some of these are not brand new to us. We've been looking at them very closely. As you know, then on the gapping downside, couple of that I have not seen, like NLSN. I'm not sure what that is, but we'll dive into that. And then our regulars, BA, Billy, Futu, Baba, JD, all the Chinese stocks coming in here, down this morning, some about around 2 to 4%. And then we got a couple of other ones like EV, XBEV, Love, and so forth. So looking forward to see what kind of week we're going to be getting into. Norm, we had an incredible, interesting week, as you know. I know you didn't trade as much last week, but give us an overview of what the market, and also give us a little update on. I know you were traveling in the headquarters, how that went, and how much fun you guys had there.
Yeah, absolutely. I'll start off with that. Yeah, I mean, it was fun. It always is fun. It's great to see the guys. I was in meetings almost all day, every day, Tuesday to Friday. So a lot of that just trying to plot forward the course of BBT, and we're always trying to improve. It's amazing, almost 4 years here, how much we've improved and how much we've grown since those early days, and just want to make sure that continues along with all our other fintech type of work with the trading terminal and everything else. So. Great to see Andrew and Brian and Artie and the whole team up there. Mike, of course. So anyway, that having been said, last week was the best week the SPY has seen in 2022. That's not saying squat, really, but it was a nice, it was a good week. You can see that nice big white candle. Obviously, we still got a lot of the same concern. Yeah, low bar D miles. You're right. A lot of the same concerns going on. Jared did a great job of recapping what's going on in the market, so I won't rehash all of it. But we'll see. We'll see how it goes. Oil's popped back up this morning after pulling back a little bit, but it's still way up there. But it's eased a little bit now. It's starting to roll again. So. 8:30, we just had Chicago Fed National Activity Index. I've not seen that number yet. Jay Powell speaks at noon. That's what we got. Let's see what this week has in store, buddy.
Yep, absolutely. Looking forward to it for sure, guys. Let's get into our gappers list this morning. Let's remove the stuff we had yesterday here. There's a few stocks that, again, just have been so fun to watch, guys. So I'm going to add this one on here. Even this morning, they're looking well. I'm going to be putting on Baba here just so I don't forget. That's going to be on my list. I also like Neil today. Has a lot of volume. We'll get to those in a second. I don't see Neo on the gappers list this morning because it's pretty much flat right now, but the volume's looking good at 1.2 million. So I'm going to have that on deck. These two, both Chinese stocks, obviously, Chinese stocks last week were just on fire, both on the downside a little bit and then just recovering there with all the news coming out, the positive stuff happening. So definitely going to be taking a look at those two. And there's others you can look at, JD, Billy, Futu. There's a bunch there. All right, heading to our gappers list this morning, we have PLAN this morning. They are up
trash.
20. Yeah, I see it flat here, up 28%, 2.2. But again, for those that don't know, buyouts usually do not trade very well intraday. They get stuck at a price. So, you got to look under the hood here. Looking at numbers, they look great. But once you get into the details, you can see that's no good there. PIK, this was a low flow. Did we have this last week? I believe we did. We had this last week too. And it's interesting here, guys, because the first day is great usually for these low floats. Second day, sometimes not the case. They start dropping down, but this one continues to rip higher here. Now we're up another 20%, 3.3. And if my mind serves me correctly, I believe they're doing something with a big name. I forget the name of the
Disney.
company. Disney.
That was announced last week and caused the pop on the 17th, and so it's continuation from that.
Yep.
As you mentioned, the low floats continuation can be really difficult at times. So not really on my list, but who knows?
Yeah,
I see Indo's back.
Yeah, you know what? Even when you a few times last week they made some noise here, especially I think it was on Thursday. Right. They had popped up, but yeah, this one is back here, not looking great right now, but it's not falling off the face of the earth, man. It's holding 30 here, so who knows? Maybe it does want to might have something in it. Who knows? Definitely worth watching. Not doing a whole lot right now, but that can get going pretty quickly there. HUSA this morning. No, this is not looking great. I mean, I'm gonna look at Oxy, right? We know Oxy has been fun. Let's take a look at that now, see what's going on there. I love the daily on Oxy. We continue to slam against this high of the not high of the pre-market, but also the high of these last couple of days right on there. We continue to slam against that. Last week we tested it one more time, and you see here we're doing higher lows as well. So it is just setting up nicely for a possible pop here. But as we all know, a lot depends on the overall sector, right? When it comes to oil. So, but again, just the technicals are looking rather nice today. So we'll put Oxy on there. Heading down here, PDD, Oxy is there. So PDD this morning, great pre-market activity. Norm, how do you feel about this stock?
They had earnings this morning. It's been pretty clean. I mean, it had that big drop right when it announced because they missed their numbers, but then it's popped after that. So there must have been something in the details that they liked. So I mean, it's bucking the trend on the Chinese tickers. That's for sure.
Yeah. Definitely going to put that on here, guys. 4.7 this morning. Not a favorite of ours, but today's, as Nora mentioned, it is looking good. Worth keeping an eye on. So right now, up 3.7, 4.7 million shares traded. We'll keep an eye on that. Oxy, we have. I think this is a good one to keep an eye on. Even if you don't keep it as your main, maybe throw it down as a possible. But it's good to have that one on there. Shell, they are up 2.5. This is Royal Dutch Shell. What is this?
Oil.
Oil company. All right.
You're better off. I mean, it's Netherlands based. It's it's better, I think, trading Oxy or something US based.
I agree 100%. ZIM, this thing is up 2.2. It has no volume. The daily looks great. Trades very light volume for the most part. So it does not look like a great intraday trading stock. So I'm going to skip on it for now. Let's take a look at a few here that are gapping down. We see start with all the Chinese
Buddy of
stocks.
mine is in Zim from like a
Yeah.
year ago.
Oh, let me go back to make sure he's doing well, and he is doing very well.
And I think they also have a $14, $17 special dividend coming out too.
Oh wow,
yeah.
very nice, very nice.
So-
Good for him, man. It's always great to to be able to hit one of those out of the park there. So
Yeah.
that is nice. Gapping down today, guys. Couple of we're gonna look at the Chinese stocks. Obviously, it's a lot going on there overall with the market, overall with their delisting. Now kind of working with the SEC to not get delisted. So it's a whole bunch of stuff going on there. And Norm, we've been around long enough. You know how fast that can change. I mean,
yeah.
yeah.
I don't know. I mean, I'm sure everybody's heard the news of this. It was alerts on phones and everything that there was a plane crash in China on a Boeing 737-800. This is not the MAX. This is the Dash 800. It's getting hit on this news. There is unconfirmed, at least when I saw it a couple hours ago, video of surveillance video that apparently caught this crash out in the middle of nowhere in the mountains in a straight nose down dive. And some of the data is showing that this plane might have been going so fast it was either at or even possibly slightly exceeding the speed of sound. I don't know if we have any ATP certified pilots in the room or anybody that has there's cameras everywhere. Josh, there's cameras everywhere in China. ATP pilots or anybody that's flown a 737, but
is that possible?
It's plane. You would think it would break apart into pieces before doing that, hitting that. Who knows how long it was in that attitude, but it just terrible. So it killed everybody on board, obviously. But I don't know. I'm curious. But Boeing's definitely in play today. Boeing's definitely in play, and we'll see how it goes.
See what happens here, guys, and we'll put them on here. And you know how this goes, right? They'll try to see who's at fault. Pilot or equipment makes a big difference, or maintenance errors, which you'd be surprised how much that happens. All right, guys. So yeah, BA definitely in play. We got a Baba, we got JD. I got Baba on deck. JD's another one that you can put on deck if you like. I prefer Baba overall for these Chinese companies. And then down here we have a Tiger. This morning up 3.8, but I'm not really liking the pre-market activity on this. Had a good day on Friday, but right now not looking all that hot so far. So, all right, we will stop here. Norm, anything you like on your end this morning?
As we've discussed, man, and I mentioned it last week, I have been out. I traded one day last week, and the previous week, I don't think I traded at all as I was traveling. Maybe the Friday, I can't even remember at this point. So I'm going to take it super slow. I think we've got a couple of good ones here. PDD and which I'm not a big fan of trading Chinese stocks, but I might dip my toe in that one, and or Boeing. But I'm going to take it small, and we'll see.
Yeah, absolutely, my friend. Another one that popped up last week was GameStop. GameStop had a big move. Not doing a whole lot right now, but
earnings, didn't they?
Yeah, they had earnings, and they had actually a pretty decent day. I want to keep that on secondary here just to see if there's any kind of continuation or follow through up or down. Just curious to see where this is going to go next. Might not do anything, but I'm slightly interested in that one. All right, let's take it to the room, guys. Let's start here with Corey. You're giving us NRSN and looking interesting. NRSN, let's take a look here. Well, it's definitely starting to get going. It needs a little more time to see what this pop really means. Are we going to get any type of continuation here at all? Are we going to hold and then move higher? But again, too early right now to decide. We'll put it on here, NRST. I'm assuming it's a low flow. NRSN is the correct ticker. I'm assuming it's a low flow. Let's check NRSN. And it is 6.1. So we'll come back to it. If it can hold here, great. If it comes back down to 1.6, it's no good. And also, guys, very, very low flow stock that trades horrible. More kind of borderline penny stock, not really, but just be very careful. We'll see. Tiger made it to the gappers list. Yeah, it did. It did. I don't like it right now, but we'll come back to that if it gets better. Dan, Triple H is giving us plan PALPAPLAN, and this one here. Oh no, we looked at this.
That's the
This is the
buyout.
it's the buyout.
Yeah.
That's the
What's
buyout.
not?
Alan, Microsoft, Venuta. I did not skip it, but we have BA as well. But let's look at Microsoft now. Yeah, BA is definitely in play. Look at the volume coming in there, 2.5 right now. Microsoft this morning looking pretty quiet at the moment. I mean, 183,000 shares traded. Unless they have any news, I mean, it looks pretty quiet. I'd rather, if you want to look at the tech sector, you can look at Apple. Apple actually has a decent pre-market activity, and their daily looks good now that I'm pulling it up here. Not bad. I mean, we had such a nice rip the last couple of days, guys. Oh, we just incredible stuff there. Yeah, I think Apple could be a one to keep an eye on. So we'll throw that on there as well. All right, heading back down. Bank of America break for high on the pivots there. Let's see, BAC. Pretty quiet. Pretty quiet.
I've never. Hey, by the way,
Yeah,
I am long ribs. They are on the gap up list.
you are long. Where is it?
Look at the room screen.
Yeah. Oh my God. Yes. We're gonna have fun today.
That was pointed out on YouTube.
Oh man. All right. So so yeah. All right. So Bank of America, guys, no good there. It's pretty quiet at the moment. So I'm gonna skip on that for now. CTVA. I skipped a few people. Hold on. Gold. U versus U. I don't really look at that one as a ticker. You can look at it, but I'm not gonna look at it. Let's look at Nvidia here. Hold on. Let me sure my link is correct here. Nvidia. Okay, there we go. Yes, I like Apple better this morning. Nvidia, another one. Again, all these tech companies, guys, just popping up huge last week. Everything, as you saw the overall market, you saw the weekly bar we showed you earlier was all green. So obviously a lot of these stocks bounced and did very well. Nvidia included. But Apple's the one for me this morning, guys. I think it looks pretty decent as far as pre-market action. A CTVA, let's take a look at that one. CTVA, no. No. This is no good. This is a 681,000. It's a block trade. It looks like. Yeah,
Yeah.
that's no good. Let's head down to Tesla. Tesla this morning. Yeah, Tesla looks good, guys. Tesla does look good. Pre-market activity looks interesting as well. Daily looks very nice, right? You kind of had a nice. You had a range right over here using that previous day close line for a while. A few times you dipped below and just came right back to it. We're hitting that right now. We're kind of getting right in the smack in the middle of this range we had from looks like January to February there. So that could be interesting. Could be. Let's see. Tesla. We'll put it on there. JD might be the sleeper for today. Yeah, I have Baba, but you're right. I mean, it all depends how these Chinese stocks are gonna trend and open up today. Right now, Baba seems to be the only one that has the better pre-market activity. But you know how it goes. If one of them starts trending, JD, I know these other ones are gonna also join the party. So you can watch either one of those. But Baba has traded so well. You guys saw a lot of my recaps last week. I think I traded Baba almost probably 4 out of the 5 days, right? So that was pretty nice. MULN. No, I'm not a fan of this one. We saw this last week too, popped up here. It just doesn't look good to me. 22 million, and no, I'm just not my type of stock there. So I'm gonna just skip on that one. Blink, BLNK. No volume. Daily. I see what you're looking at the daily for a definitely a breakout here. That looks nice. You're kind of hitting a great area of resistance for this stock. So that does look good as far as the daily. But pre-market, you just need more volume. You need any volume. You only have the 3,800 here. So you need just some volume here. You might get at the mark at the bell after the market open. But yeah, I see what you're looking at. Daily looks great, but we just need we need volume there. Good one for the scanners for sure, Cody. Let's take it over to our chat room. No, the other chat room, YouTube. Let's see what we have here. Frank, I just kind of went over MULN. I'm not typically the type of stock that we trade. PIK, we do have down here. We're going to come back to that one right now. 3.7 million up 18.4. So that is good. Why is IMPP down? I have no idea. What is that? IMPP. Oh, it's down because it's a horrible stock. What is this? Oh, this is. Okay, this is all right.
Yeah.
This is oil. Yeah. No, no, I don't know.
A
I don't know,
Greek
but
oil company. Yeah, I would just
yeah, that.
second off. They have a secondary. That's why. That's
Oh,
your
okay,
answer.
okay. There you go. So that's yeah, that's not looking any
Market
good.
cap of $49 million, and they're doing a $60 million secondary.
Yep, yep.
That's questionable.
Yeah,
Run.
yes, run from that. Michael, SoFi this morning. Let's take a look here. SoFi today. Pre-market actions, we seen better from them. They can put in good volume. 540 for these guys is not great. They're pretty much flat right now. We need to see more out of them for the most part. So we'll skip on that one. Snap, Snap, with everything going on, they've been moving pretty well. I mean, I have not kept them on the list, but every time mid morning someone says, "Oh, look at Snap," and Snap has done a beautiful run, and that happened a couple of times last week. So I don't know what the deal is with them, but they've been trading very well. For me, I'm not aware of any news that they had last week, but for some reason, they just seem to be trading well throughout last week. So right now, not doing a whole lot, but doesn't mean anything because a lot of these days, if you look at their pre-market action, they had nothing going on, right? They were not even on our gappers list. So Anthony, if you have space, keep an eye on this one, and you could definitely take advantage if we have any type of moves that we did last week. But yeah, they've been moving rather well intraday there. A-Firm was great stock. I traded this. Was it Thursday? I don't know, but this is a great stock. Have been doing very well here. Friday had an amazing day. We missed that one, but right now pre-market action is not doing a whole lot. But if you look at A-Firm, their pre-market activity hasn't done much. Now, talk about a stock that has been getting slammed, guys. This thing was trading at what, 150, 100 plus, and now we're back at 40. I mean, I got my own opinion about the company itself, but it's been trading well. Maybe found a bottom here. Who knows? Possible for now, A-Firm, and we can always come back to that one there. All right, Shopify. Again, this is not a great trading stock intraday. I kind of stay away from this one. Very high price stock, and I hate the spread on it, and I hate the type of volume that it gets. So it's not even more about the price; it's the type of volume that it gets is so low for intraday trading. So just be careful. Your stop has to be very wide at times. Baba kind of used to be like that, not as bad. But Baba has completely changed the way it trades, right? It has a lot of volume now. Is extremely liquid. I mean, it's doing very very well for us this last couple of weeks and months, really. All right, we'll stop here, guys. Let's take it over to our community events and announcements for this week, and then we'll come back and fine tune this list here. Oh, I think I don't hear Norm. Let me make sure I didn't lose Storm.
Sorry, yeah, I
Oh, there
muted
you
for
are.
a second. If I go off, man, my backup power supply is clicking on and off for some reason, so I don't know if there's a power surge going on or what. But
Yep.
if I hop off, that's why. Anyway, usually we've got the Brian Swing trading session 2:30 in the afternoon on Mondays, and then onboarding 7 p.m. Monday nights, open to everybody. So if you are watching on YouTube, come over, try it out. You can do the intro membership for 1 week. Doesn't recur. We'll get more in that in a second, and you can take part in that onboarding webinar. And then the technology webinar is at 8 p.m. Eastern. Eamon's trade reviews are at noon Eastern on Tuesdays and Thursdays. Success webinars 8 p.m. on Tuesday. Generally, psychology 8 p.m. on Wednesday. Thursday is mentorship jam pack 11 a.m. with Andrew. You've got the new trader Q&A with John. That's actually at 2 o'clock, not 1 o'clock Eastern. My apologies for not updating that yet. And Ed, you've got at 4 and or 4:30, depending on if there's any earnings he's going to trade. And Thor at 8 p.m. Eastern. Then Jared at 11 p.m. For crypto on Friday. As I was mentioning, the onboarding session every Monday night, 7 p.m. Everybody is welcome to this. It is in the classroom, so it's all membership categories can attend. Technology immediately following that, we've got Kyle this week tonight, 8 p.m. Eastern, doing a DAS Trader Pro Q&A, and the next week, Artie will be talking about how to utilize TWS for options trading. So I'm sure that'll be well attended. Megan, her first success webinar is tomorrow night, 8 p.m. Eastern, talking about Tradebook, how to use larger time frames to catch bigger moves. And then Peter will be talking about trading the right share size for you and trying to determine that share size. That's next week at 8 p.m. on Tuesday. Wonderful creator that we'll be speaking to in just a moment is going to be doing our psychology webinar this week, 5 p.m. special time due to her being in Europe. That's on Wednesday, talking about her Mental Edge Workshop Group 2, maintaining your trading performance under pressure. And then next week, Mike will be talking about probabilities, part 3, how to trade in strategy sets. Spoke of mentorship, Andrew at 11, Ed at 4, and Thor at 8 p.m. on Thursdays. Don't forget about stocktradingsimulator.com. You can go there, sign up for homework assignments while you're there, and trade our free web-based trading simulator application. All right. As I mentioned, if you are watching on YouTube, haven't been in the room, you can use the promo code PREMARKET24 to get a discount off the intro membership. That is 1 week, $24. It cancels. It is not a recurring payment, the one time only. Then you have to choose a membership category. And we still have our St. Patrick's Day promotion going on, 50% off. Just use the promo code LUCKY50 when you check out for the annual Elite membership, and you gain access to all those webinars and the recordings of past ones that I discussed a moment ago. Now, good morning, Creda. I know we've had some mic issues, so give it a shot.
I think we've sorted it. So we figured out it was a browser issue. Yeah.
We can hear you, and I'm sorry you can't see me. I've had some camera issues, so I'm off for a couple of days. But yeah, no, that's awesome. I'm glad you worked it out. I know that's frustrating, so I'm sorry it's been like that the great last couple of weeks. Today, you're going to be talking a step-by-step process to let go of mistakes and losses. So I'll just let you take it away.
Thanks, Norm. And also thanks to Carlos for sorting that issue. He helped me out to figure out what was going wrong. So we're good. So I wanted to talk about a way of actually letting go of your trading mistakes and losses, because we spoke before about the idea of self-compassion and not beating yourself up for mistakes. And it was a topic that resonated with a lot of traders, and for good reason. So when people make a mistake or have a loss, it's not that particular thing that potentially has such an impact on their trading day or their week or their P&L. It's the actions that they take afterwards. So if you let that one mistake or that one loss get in on you, and then you change your actions because you're triggered emotionally, so you're angry, you're fearful, whatever other emotion is going on, that's when you get into trouble. So it's all well and good to talk about having self-compassion, forgiving yourself and resetting to neutral. But if you don't have an actual practical process for doing that, it can be very hard. And I see in all of the performance profiles that I do with traders, self-compassion comes up again and again as something that people are very low on. So I think this is a really relevant topic to discuss. So what we're talking about is the ability to actually completely reset. So no matter what has happened, if you've made a mistake, that you can bring yourself back to that state of neutral, and you can trade according to your trading plan on the next trade that you take. And again, this can be looked at on a longer time frame. So if you can resonate with maybe having a bad Friday and then going off and letting it ruin your weekend and letting that negative emotion spill into maybe your relationships with your family, maybe you're more withdrawn for the weekend, or you're just rehashing the mistake all weekend, and then you come into your Monday trading and you're feeling like you still have this hangover from Friday. That's what we want to solve with this process that I'm going to talk about today. So the first step in this process is to understand that self-compassion is actually facilitative for performance. So even though people can think that it's, and I'm just speaking from experience of what people have brought to my table in coaching initially when we talk about this topic, but people can think that showing yourself self-compassion is weak, or you're letting yourself off the hook, or it's in some way not desirable to do it. And that's probably why lots of people don't do it. But I would argue that actually it's the quickest way for you to recover from a mistake. So there is no reason in punishing yourself, beating yourself up, giving into that inner critic. It actually delays the whole process of accepting the mistake and moving on. So how can we actually put a system in place that you can practice again and again so it becomes second nature? And not only are you telling yourself to forgive yourself for a mistake and a loss, but you actually have this system to practice so that you can tangibly do that, using a number of steps. And the more that you implement this as a technique, the quicker you'll be able to actually reset. So the first step in the process, it's a 5-step process. The first one is to actually name the emotion that you're feeling. And this might sound a bit funny, but if we are triggered and are feeling very challenging emotions, but they remain sort of outside of our conscious awareness, they are going to influence how we trade. So the first thing to do is to actually neutralize the power of those challenging emotions by naming them. And I'm actually suggesting that you are sitting there in front of your computer and you're saying out loud, I'm feeling really angry. So this would be, you've taken a loss or you've had a mistake and you're boiling with rage, and you actually name it. So you say it out loud to yourself, I'm feeling angry because XYZ. So that's the first step. You've acknowledged what you're currently feeling. So that brings you right into the present moment. The next thing to do is to actually identify exactly what happened. So what was the exact pathway that led to the mistake or the loss? And that could be actually going as far as identifying the first emotion that you felt. So maybe something happened in the market and you felt fear, or you suddenly got anxious about losing money. So something happened that changed your emotional state. Then you took an action. So perhaps you deviated from your trading plan off the back of that emotion. Then when you did that, maybe let's use a concrete example. So let's say you got anxious, you're in a trade and you're supposed to be holding it longer, but you suddenly got panicked about the idea of losing money. And so you got out of the trade too soon, and then you were really annoyed at yourself, and this has kicked off this process. So in that situation, you would identify, well, something happened in the market, something specific. I got anxious about the possibility of losing money. That triggered me, and so I jumped out of the trade, but actually it wasn't aligned with any of my exit criteria. So that was the mistake, and now you're feeling angry. So you identify exactly that pathway of things that happened. And then the next thing to do is identify what the learning is. So in that situation, the learning might be, well, I have to actually be able to deal with the fear of losing money better so that I can remain in the trade. So there's some action that you can take, or some learning that you can take, that will allow you to do this differently next time. And that's the next part of the process, is to actually identify, if this comes up again, because inevitably it will, if this situation arises again, what is my action plan? So what am I actually going to do in that situation? And maybe using the example that we're talking about, it could be something like coaching yourself out loud. So that's a useful technique as well, self-talk while you're actually in the market, in the trade. So your action plan could be that next time this arises, you talk to yourself and you say, okay, I'm feeling anxious, I'm feeling triggered that I might lose money, but I commit to holding on and continuing with my trading plan, and I'm feeling pressure, but I'm going to do it. So whatever way, that's a practical technique that you could use, but you're identifying some practical action that you can take in order to remedy this situation so it doesn't happen again. And then the last piece of the process is to actually hold yourself accountable and track that. So next time this occurs, actually track if you were able to hold your trade. So, you get anxious next time. Do you take the same action, in which case you're making the same mistake twice, and that might exacerbate your anger at yourself? Or can you implement this pre-planned action point that you've identified from the last time you made this mistake and do it differently? So as long as you are actually learning and doing the thing differently next time, then there is no reason to be beating yourself up, and it's actually a barrier to your performance. So I'll just summarize that really quick. First step, name the emotion that you're currently feeling. So you're some way triggered after the loss or the mistake. Name what that emotion is. Second step is identify the error. So identify the sequence of events that led to that error. And in some cases, it might be even that you didn't do anything wrong, but the market just went against you. So you executed your trade plan perfectly, but you still suffered a loss. And it's still worth identifying that that's what happened. Then you look at the lesson. So what can I learn from this? What's the learning that I can take out of this? And then the next step, what is the action that I can do differently next time? And it could even be something that you do, like maybe there's a piece of your mental edge that you work on in order to prevent that from happening in the future. So that's another way that you might take some action around this. And then lastly, you hold yourself accountable and you track that next time you do this, you do it differently. And that's a system for actually helping you to show yourself more compassion, avoid getting stuck in the trap of listening to your inner critic, and avoid losing energy by beating yourself up.
Awesome advice, as always. Great conversation. Very important topic. I just want to remind everybody of Creta's, where you can find her. She's on YouTube at Creta Performance, and her website is CredaPerformance.com, and on Twitter as well, Creda _perform. So thank you very much, Creda. Have a wonderful week. We will see you soon. We'll see you Wednesday, actually, and for your webinar, I believe.
Yeah. Thanks, Norm. Bye.
You got it. Take care. Bye.
Thank you so much, Creator, for that. Appreciate you very, very much. All right, guys, let's get to it. Let's give Creator a thumbs up over on YouTube. We appreciate you joining us every Monday morning, giving us that great and amazing advice. So
Your share to the room is jacked up, buddy.
Oh, what took place there? Hold on. Oh, actually, I hit the wrong button. There we go. I got it now on both sides. Here it is. Shared the wrong screen. All right, let's get to it, guys. Let's go ahead and look at our watch list for today. I have Baba on deck. That is good. Good volume there. Looking nice this morning. Has been an amazing trade over the last couple of days. Neo looking good right now too. Going green after being red for the most part of the pre-market. And doing that with some great volume. We have Oxy, which not doing a whole lot, popped up, heading sideways at the moment. We'll wait to see if this thing has the juice to get going above this a level of resistance here. Great level of resistance over the last couple of weeks. PDD looking good pre-market as well. BA, I mean, they have the news of the crash here. They're down 5% right now, 3 million shares traded. They are definitely in play this morning. I mean, it's just that's going to create some movement for them. Yeah. And then here we have Apple as well. Which is pretty much flat right now, but I like this one just to keep an eye on the tech side of things in case anything develops there. So some possibles. I have GameStop here, which is not doing a whole lot. We'll probably get rid of that one. Tesla, and I do have a firm here as well, which again, not a whole lot going on with these other ones here. And then low flow, NRS. See, this is the stuff that's not looking good now. This is no fun. This is why I got to be careful with these initial pops. You want, at least personally, I do. I want to see something develop here to tell me, okay, this is really happening. But this here, that just looks like trash to me. I'm going to get rid of that one. PIK, on the other hand, this looks very good. Great pre-market activity. We've seen some action out of this one in the past. And Indo, not doing a whole lot. Get rid of it for now. If it does get better, guys, throw it back out to us. All right, I think we're all set. Let's get some levels in here. Starting with Baba, going to remove the stuff from last week. Highs and lows around the price action at the moment. I'm going to mark down the high of the pre-market at 104.27. So we'll mark that there. And then the low of the pre-market, 172. So once you put those two levels on there, if you zoom out a little bit on your daily, you can see that you're pretty much set, guys. You have a lot going on here. I don't think you need to add anything more on the daily. You got your previous day close line, a couple of levels created by your last two trading days towards the bottom. I think you're pretty set there on Baba this morning. Here is Neo looking really good. Oh, man, I'm laughing because I almost got into this one a few minutes ago and I hesitated. 1997 is the low of the pre-market here, guys. Actually, a little bit higher. It's right at 20. So we'll mark that there. Look at this go here. Oh, man, look at that go. So hitting high of on Friday, the last trading day. If you look above that towards the top here, we are looking at a 22.89. It's a good level there, guys. You can see that right on there. Good support happening there. Got a little bit of resistance on a couple of days as well, but the support definitely happening there. That's a good target if this thing is going to be strong. Looking good right now, up 2%, but this thing has moved up quite a bit. We're down at 20, so we're down quite a bit in the red and have managed to really get going with the volume increasing here. This is looking very, very nice this morning. Here's Oxy. Again, not a whole lot going on right now. I know this is not their all-time highs, but the all-time highs goes back quite a few years. Definitely 52-week high over at around 59.50-ish. We're going to mark down the low of the pre-markets down here at a 56.80. But there's clearly, around this area, you clearly got a lot of support happening here around 57.69. So it's worth marking that there just to have it. Again, not doing a whole lot right now. We need more from Oxy. Depending on what the moderators throw out there, they have something good. We might replace that one. But right now, I'm seeing that their stuff is lining up pretty much what we have already on deck. So PDD this morning, beautiful pre-market activity, guys. Right now, towards the bottom, you're pretty much set. Highs and lows from the last two trading days are checking you off there. And then towards the top, we have a level here over at 49.97. Might actually be 50 on the dot. That's a good area of support and resistance there. If you want to have something midpoint, this one here is not don't put too much weight on this one, but 47.97. That could be a good one. There you have a couple of days bouncing off of that, maybe a minor support resistance level there for PDD. Here's BA, guys. So unfortunate news this morning out of China from one of their aircrafts diving into the ground. As you know, there's posted some video out there of that as well. So it's a shame. Sorry for the families lost there. 175.31 is the low of the pre-market. 167.59. We'll see how this is going to develop. And guys, be careful. I know that's horrible news. And sometimes people want to have a bias to go short. You'd be surprised how these things can go the other way. So just be careful on that. On having that bias, I'm going to go short, all in, and then next this thing is ripping your face off. So very, very careful. At 182.18, good level here. You have some resistance happening there as well. So I'm going to mark that down. In the pre-market, you can see we're touching up on that a little bit there as well. 182.18. Surrounding the highs and lows of the last 2 trading days. So you pretty much got all the levels set outside of the price range that we have here from our highs and lows. So pretty good there on BA. Guys, definitely in play. Down 5%, 3 million shares traded so far. Here's Apple. Apple towards the bottom. You're looking really good. Highs and lows from the last 2 trading days. We had a beautiful run here on Apple. Low of the pre-market, 163.06 is good there. And then towards the top, you have the highs of the pre-market almost slamming against the highs of Friday. Slightly lower, about a couple of cents here, 164. So I like Apple right now. They're getting great volume, 961. Guys, you can look at other ones like NVIDIA. You can look at AMD, which we're actually going to pop up and take a look at now. All of them have very, very similar dailies. AMD is a little bit different because they really did not lose much below 100 there, but they've been looks like consolidating more than anything the last couple of days. But if you look at Apple and Nvidia, these guys, they were down quite a bit and they popped up pretty nice over the last week. So interesting to see what's going to happen there. Great volume on Apple this morning. All right, let's take a look at what our moderators are looking at so far over on YouTube. If you haven't done so already, hit that thumbs up. We appreciate it very, very much. Help us get to our 250 mark there. It's appreciated. All right, bringing over our moderators lineup this morning and see what these guys are watching today. We'll start with, let me sure I'm not missing anyone up here. I am not. We'll start with Thor. He's looking at Oxy, PayPal, BA, secondary, Facebook, and NEO. Jerry is watching BA, PDD, Oxy, secondary list Lucid, Tesla, and NVIDIA. Susan is watching Baba, Apple, and the secondary list is going to be overall market and Tesla there. Tiffany's looking at PDD, BA, secondary list Tesla, and NEO. Dima looking at PDD, Baba, Oxy, and Apple on her list. Megan looking at PayPal, Twitter, and mRNA. I know mRNA had a couple of really good days last week with some news as well. So we'll take a look at that one in a second. And no IPOs and SPACs being reported for today. So we'll wait for Peter's list. I'm sure it's going to include, of course, AMD. There it is, Baba. BA, PDD. Secondary list, Baba, Apple, and PIK, which is the low flow of the day so far, looking really good with 4.6 million shares traded. This thing is up 20% this morning, so that is looking exciting. So we'll have to see where it goes here. Had a good day on Thursday. What did it do Friday? Let's take a look at the details on Friday. Friday had a good pre-market activity, nice pop at the open, then did nothing after that. And today they're looking to hopefully break out at 760, which is your highs from Friday. So we'll see where PIK goes today. All right, I think we have a really good list. We got a couple of minutes. Anything else that we might have missed, Norm, that you like on your end? I know Norm is working through some tech stuff right now, so he might not be completely looking at anything for the most part just yet. And I know he's easing his way back into trading this week from being, kind of off on vacation, then part-time trading last week with the travels. We also got a little bit of time, 3 minutes. We can answer some questions if anybody has any questions. Carlos, American Airlines on the list. Let's take a look. American Airlines. Let's see. 8L on the list. They're consolidating here. They got decent volume. This could be a good one. At least it's a possible. I don't see it beating any of my other stocks. Maybe Oxy. But I don't see it doing anything great right now. I like the volume on it, but pre-market is not really calling my attention at the moment. Let's take a look at CCL, which they tend to move together here. The CCL's daily does look very interesting, guys, so we'll be on the lookout for that. Let's look at mRNA. It's another one that the last week had a nice little run, had a couple of really good days there where it stretched out pretty nice. Right now, pretty much flat, but their daily is what you want to be looking at, right? Their data looks very good here. And for the most part, mRNA, does not put a great pre-market activity unless there's some crazy news that's driving it. In the chat room, I see you guys are throwing out Mara. Let's take a look at Mara. I have not traded Mara in some time. I just have not been uh, uh, liking the way they've been trading lately. They were good. We talked about this before. They were good in the past. I know they're putting in some really good days here, but again, how much credit can you give them when we have everything else trading this way, right? Better opportunities out there. So that's my take on Mara. As far as what I have on my list, I think there's better stuff in play this morning. We need significant news from Bitcoin to get that going. Carlos, on BA news, would you be short biased going into today's market? I was just talking about that. Obviously this is not great news, right? This thing is down 5%. Now, here's what will happen. And this takes a while. After they go through the entire review, if they find out that it was an aircraft issue, then yes, this thing I'll be short biased personally. But if it was a pilot error or a maintenance error from the airlines, that's different. That's not BA's fault, right? So you got to wait for that. Initially, this is going to hurt them, but once that report comes out, then that is where they're going to put the blame on. That is where we want to be careful. I'm not sure what airline it was. I haven't looked at the news yet. Just I heard it from Norm here. So if it was a maintenance error, which you'd be surprised how much times these maintenance crews try to rush these aircrafts to get them up in the air. I don't want to scare anybody from flying, but it does happen. Time is money. They don't want those things sitting down. So if somebody, screwed up the maintenance, that's not on BA, right? It's not on the actual company itself, but whoever's operating it. So I won't be biased on it, man. I will not be biased on this. You have to wait, see what happens. The good thing is it is in play. It has the volume. See, the way you have to look at news sometimes is let it create volatility and volume for you. And then just see what's happening at the market open and then trade your setup. If that's long or short, just trade your setup based on that, right? For the most part, a lot of our setups can go either way, long or short. So you want to have that. And now there are some traders that believe that you should have a bias, based on what the market trend is doing, based on what the stock is doing. So you have to do what your strategy works for you, what your strategy tells you to do. My strategies tell me go in there without a bias and see what the price action is telling you. Read the price action, then take action based on that, right? So that's the way I'm usually trading. 9:15, guys. We are all set here. Thank you so much over on YouTube for joining us. We have our watch list here. Just to recap, we have Baba, which has amazing volume. We have Neo, also great volume here, leaving the previous day close. This thing is up 2.4, was probably down 3%. Now in the green side of things, we have Oxy here, which is kind of going sideways. This is more of a secondary now, but the daily does look good. PDD looking very nice, had a very good run already this morning, up 7% almost. Looking forward to that one, has great volume. BA, again, dipped all the way down to 175, but now it's $10 high, up from the lows, right? So we'll see how much this is going to affect them today. They are definitely in play with 3.1. And we have Apple, our tech company for today, looking to see where that's going to go. Guys, trade safe over on YouTube. Remember, tonight we have our onboarding class at 7 p.m. Eastern time. So if you have not checked out our chat room or our community, you can do so. Pre-market 24 for $24. You get access to 7 days of 2 chat rooms in our community. So you get the main chat room and you get Edge chat room. It's a lot of fun stuff going on. Come hang out with us. We appreciate it. And come hang out with me tonight with the pre-market prep at 7. So have a good one, everyone. Hit that thumbs up, and we will see you tomorrow. Take care, guys.